Bitcoin cycle, the halving cycle, seems to be the anchoring of the markets, much like the US Treasury market is the anchoring for the global bond markets. So the Bitcoin halving cycle seems to be the anchoring. And then what we're seeing is, yes, there's a bunch of assets that go up a lot or go down a lot, but the ones that get adoption start looking like each other. And it's weird because it seems that the human psyche plays out as well. Ethereum's been in this sideways consolidation since May. It's just about to break out of a wedge pattern. These kind of patterns, when they break, tend to be explosive in move. And guess what? I've said this recently, I'm incredibly wildly bullish about the space and have been, in the last few months. And I've been saying this point, everything is about to start breaking out. And we've seen this happen before. We know the pattern. This October, November, December, probably January, February, March is going to be the point where it's almost impossible to lose money by owning anything. It's that point in the risk cycle where maximum risk seeking is coming. And we've had this long period of sideways consolidation, and now we're going to see the fireworks. And I'm going to show you what I mean by the fireworks. So the first chart I'm going to show you is Bitcoin's price versus 2012-13 bull market. I've been using this for over a year, and it's uncanny how it's worked. And that shows you exactly what I'm talking about, that the latter part of the year is a huge run. This tells you it could go up to 250,000 if it repeated the same pattern. I actually think there's an upside potential into next year because of the changing structure of the markets, because institutions tend to allocate at quarter ends. They will have seen the FOMO of this quarter, and many will be looking for the opportunity to invest in the new year, 2022. So hedge funds and institutions will be allocating money in January. I think it creates a second leg to this, along with the ETF. So that chart is incredible. The other one that's really got my focus, as everybody knows, has been Ethereum. Ethereum's been in this sideways consolidation since May. It's just about to break out of a wedge pattern. These kind of patterns, when they break, tend to be explosive in move. And guess what? Bitcoin cycle, the halving cycle, seems to be the anchoring of the markets, much like the US Treasury market is the anchoring for the global bond markets. So the Bitcoin halving cycle seems to be the anchoring. And then what we're seeing is, yes, there's a bunch of assets that go up a lot or go down a lot, but the ones that get adoption start looking like each other. And it's weird because it seems that the human psyche plays out as well. Now, there's obviously tax season that does stuff to do with that, a whole bunch of stuff, but human psyche seems to play out. The behavioral impact of humans seems to play out in the same way every time. So you have a big run, then everybody gets, well, what happens if this is going to happen? And they start getting nervous. So we have the correction. That correction, then the weaker holders pass it to the stronger holders, and the market starts again. It seems to play out endlessly, and it seems to be where you are on the adoption curve versus the kind of Metcalfe's law idea, and they all seem to trade the same, and it's fascinating. Ethereum is exactly following Bitcoin over an extended period of time. We're talking 6 years here of Bitcoin's previous run. So again, it just suggests that Ethereum can get up to 20,000. Again, I actually think it exceeds this, but it just shows you what the back end of the year or going out to March can look like. If you want to see it in regular price terms, it kind of looks like this. That's not on the log chart, which is, again, mind-blowing in terms of performance. And then obviously the bear market steps in after that. Ethereum is my base investment right now. 70% of my entire portfolio. It's why, other things can outperform. Solana will probably outperform, but it has more risk because it doesn't have as obviously defined network effects. It doesn't have some of the other identifiers. So ETH is a higher quality trade for me. Bitcoin's a high quality trade as well, very high quality trade. I just think ETH is equally high quality for different reasons, but it's likely to outperform because of network effects, and it's earlier than Bitcoin. The bigger part of this picture is I like to use logarithmic trends with regression channels because it shows you, for these exponential assets, things that are cheap and expensive versus trend. So interestingly enough, the entire crypto market cap, around 2 trillion, is actually 2 standard deviations oversold. Now, this chart is like a few weeks out of date, but it's basically 2 standard deviations oversold. By the peak of a bull market, we tend to get 2 standard deviations overbought. So at 2 trillion, it's likely to get to like March at 10 trillion. So that's the 5x of the entire space. The macro space, I see it on Twitter. Everyone's very excited about inflation, blah, blah, blah. Bond yields went up. They came back down again a bit. I still can't get excited. The dollar broke higher, but it's not moving anything dramatically. Bond yields, outside of the screaming and shouting about this is the end of the world of inflation, bond yields don't suggest much yet. I think they could get to 175 in the 10-year, but I still think they're range bound and lower. I still think growth comes lower. We're seeing this huge dichotomy with the Fed forecasting the Atlanta Fed. The Atlanta Fed, I think, currently is like 1.3% GDP growth for this quarter, and the Fed had 7%, as David Rosenberg pointed out, if you impute it. So I still think there's a slowdown. I think you are raising prices on people that cannot raise wages fast enough or will get those wage rises. So you've got negative real earnings, which is kind of interesting. And that makes me very, very bullish on the space overall. So here's another example of one of the tokens that is earlier stage, seeing adoption. This is Solana. I've talked about this a reasonable amount. Solana is seeing adoption. It's very clear. And what's amazing, it's exactly following the Ethereum price from its last bull run. And guess what? The prices are almost identical too. So the left scale and the right scale are almost the same. They're both at roughly $1,000. And that's going to lower consumption. So without question, you can't raise the price of oil, natural gas, foodstuffs, rent, and cars and houses, and it not to affect consumption. So I think that forward growth is still low, and I've talked about this for a long time, but these macro trends take ages to play out. Sorry, not $1,000. They're both roughly at whatever the price is now, $400, and it looks like there's a hell of a lot of upside. So it's all to play for me. We've gone through the period of consolidation, and the period of consolidation is when the market gathers the power. And we know we've got restricted supply of ETH, all the Bitcoin coming off exchanges. We've got the ETF, we've got ETH 2.0, we've got lots of adoption going on. I couldn't think of a sweeter spot for this. I mean, this is as good an opportunity as we saw in March, April, May, when I started pounding the table and getting irresponsibly long. Yeah, it's about what I think is going to outperform at this point in the cycle. There's nothing bad about Bitcoin. I don't like Bitcoin, I prefer ETH. No, I think ETH's going to outperform. So I want to have my money, which I've worked really bloody hard for, in the thing that's going to make the most money for me. Now, other people want to have the philosophical standpoint. That's fine, but that's not my job. My job, for myself and for clients, is to make sure people make as much money as possible. Don't forget, we're fighting the 15% hurdle rate of the central bank printing, and you got to be on your toes to try and make the money.